You finally landed it, a remote tech job based overseas, paying $120,000 a year. The math in your head is simple. Divide by 12, convert to lira, and start picking out a new car. But the moment you leave your comfortable corporate payroll to work for a foreign company, you step into the crosshairs of the Turkish tax system. If you set this up wrong, a massive chunk of that salary will vanish before it ever hits your bank account. You are immediately buried under a mountain of intimidating accounting terms. Tahakkuk is the official tax office receipt showing the exact amount of tax you owe. Bakuk is the mandatory monthly Social Security premium you must pay as a self-employed individual. Muhtasar and Stopaj are the monthly declarations and withholding taxes applied to your expenses. It is enough to paralyze any new freelancer into making expensive mistakes. There is a specific legal structure that makes staying in Turkey highly profitable. The government offers a massive 80% income tax exemption for certain remote workers exporting services abroad. Leaving a safe corporate payroll is only financially viable if you navigate the setup perfectly to claim this exemption. Miss a step, and strict government penalties and fees will wipe out your entire financial advantage. The first trap trips you up before you even write a line of code. It happens when you blindly sign the standard employment contract your foreign employer sends over, without auditing the specific job title and relationship type. The 80% tax exemption has extremely rigid rules. Your job description must explicitly state approved categories like software development, engineering, or data analysis. Vague terms like consulting do not qualify. This chart shows exactly how a single word dictates your financial future. Signing an independent contractor agreement as a software developer routes your income to the 80% tax exemption node. But signing a generic employee contract as a consultant routes your income straight to the full taxation node under Turkish law. One wrong word on that initial PDF legally disqualifies you from the tax advantage entirely, destroying the financial logic of taking the job. The second mistake catches developers who want to look impressive. To work as an independent contractor, you have to open a business, and many choose a limited or anonim şirketi because a corporate structure sounds prestigious to a foreign employer. These corporate structures come with a severe financial penalty. The moment you attempt to withdraw your own earned money from the company accounts for personal use, you trigger a double taxation trap, paying high dividend taxes on top of your corporate taxes. The correct move is to establish a şahıs şirketi. A şahıs şirketi is a simple sole proprietorship, where you and the business are legally considered the exact same entity. A sole proprietorship has much lower monthly administrative costs. You can easily deduct personal expenses, like your child's education or your spouse's health bills, directly from your revenue. And because company money is legally your money, the double taxation penalty disappears completely. In remote freelance work, corporate prestige is an expensive liability. Legal simplicity is the ultimate driver of maximum profit. To register your sole proprietorship, the government requires a legal business headquarters. Many developers simply rent a physical office space or register their rented residential apartment as their official workspace. Doing this immediately triggers stoppage. Stoppage is a withholding tax where the tenant is legally required to pay a percentage of their gross rent directly to the tax office on behalf of the landlord. By registering a rented home as a workspace, you force yourself to pay this extra tax out of pocket on your entire rent amount. The optimal workaround is utilizing a virtual office. For a small monthly fee, a virtual office provides a legal commercial address that fully satisfies the government's registry requirements. By eliminating physical commercial overhead and bypassing the residential withholding tax, you protect your profit margin without violating any tax registry rules. Let's run the exact numbers. Assume you navigated the gauntlet perfectly. You chose a sole proprietorship, set up a virtual office, and ensured your contract explicitly labels you a software developer. Watch the deductions from a $120,000 income. The 80% exemption shrinks your tax burden. We subtract minimum Bakru premiums, virtual office fees, and stamp taxes. You are left with a 13% cost, pocketing up to $108,000 in pure net profit. Executing the bureaucracy flawlessly allows you to keep nearly 90% of your overseas income. It is a mathematical reality that radically outperforms any local corporate salary. Managing strict tax deadlines, legal declarations, and registry visits alone is a significant administrative liability, where a single oversight carries a heavy financial penalty. That is why hiring a specialized CPA is the most effective way to secure your income. A dedicated consultancy handles the entire onboarding process for you. They execute a flawless company setup, audit your overseas contract for compliance, and manage automated monthly tax declarations. Software developers should spend their time writing code and building products, not playing amateur accountant with their hard-earned money. Send us an email today and let us secure your optimal remote work tax setup.